Welcome and thanks for joining us at EMII.com. I'm Remy for your Capital Markets Report. Today is Monday, July 14, 2008. Anheuser-Busch has begun negotiations for a friendly merger with Belgian-Brazilian brewer InBev. This according to the Wall Street Journal. Anheuser, the maker of Budweiser and Michelob, had been a reluctant takeover target, spurning InBev's $46.3 billion bid and fighting efforts by the company to oust its board. After weeks of mounting tensions, the Wall Street Journal reported that InBev, which makes Stella Artois and Beck's beer, had raised its bid to $70 a share from $65 in an effort to seal a friendly deal. The paper said Anheuser's board is likely to accept the sweetened offer this weekend, citing a person familiar with the matter. According to a report in the New York Times, helping to drive the two sides into talks are signs that some big investors in Anheuser, including second-largest shareholder Berkshire Hathaway, were leaning towards backing a deal with InBev. Analysts have said a seal of approval from billionaire investor Warren Buffett would probably influence other shareholders. Berkshire owns a 5% stake in the brewer. And in other capital markets news, French pharmaceutical company Sanofi-Aventis has tendered a $70.46 per share offer to acquire Czech drug company Zentiva, outbidding an offer from a rival shareholder. This according to Thomson Merger News. Sanofi, Zentiva's largest shareholder with a 24.9% stake, said last month it was planning a bid that values the company at 40.04 billion crowns, beating a 950 crown per share offer from financial group PPF. PPF, with allied shareholders, has a 19.2% stake in Zentiva. Czech-Slovak financial group J&T controls 7.6% in the company. Zentiva said it would consider details of the offer and publish its position in due course. The company said in a statement, until then, quote, shareholders are strongly advised not to take any action in regards to the published offer or the offer made by Anthea Rose Limited. Sanofi, the world's third-largest drugs maker by sales, said its bid, announced in newspaper Hospodářské noviny, is valid for 10 weeks. The French company said it aims to strengthen its position in the markets in which Zentiva operates. It said the acquisition will enable Sanofi to accelerate development of the target company and place its product portfolio offer in other territories in which Sanofi is already benefiting from its well-established position. And moving on to other capital markets news, One Steel Limited, Australia's second-largest steel company, sold its $200 million traditional private placement to more than 10 U.S. investors. This according to Reuters. A source told Reuters the issue comprised 3 tranches and paid a coupon of 7% for the 7-year tranche, 7.33% for the 10-year tranche, and 7.43% for the 12-year. The margins over U.S. Treasuries were not disclosed, but the 10-year is believed to have paid less than 312.5 basis points over UST, according to another market source. The issue was upsized from an initial size of $150 million to $200 million. The company said in a statement that Bank of America and Westpac Institutional Bank led the debt offer, which was flagged in May. Both banks declined to comment. The funds will be used to refinance debt and to extend the duration of One Steel's debt portfolio. This is the firm's 4th issue in the U.S. traditional private market. One Steel is not publicly rated, but analysts see it as a BBB rated credit. And the U.S. private placement market is a popular source of funds for Australian and New Zealand companies looking for long-dated debt. And in more capital markets news, Ashland Inc., which makes Valvoline motor oil, is buying out Hercules Inc. in a $2.6 billion cash and stock deal that would significantly boost its product offerings. This according to Reuters. The acquisition would give Ashland a major presence in the water treatment arena that primarily services the pulp and paper industry. It would increase the company's portfolio of specialty additives and ingredients. Ashland would pay $18.60 a share in cash and .093 of a share for each share of Hercules common stock. Including net assumed debt, the deal is worth $3.3 billion. Based on closing stock prices on Thursday, the transaction value Hercules at $23.01 a share. The deal comes a day after Dow Chemical announced it would acquire specialty chemical maker Rohm and Haas for $15.3 billion in an all-cash transaction. The acquisition, which is expected to close by the end of this year, is seen generating annualized cost savings of $50 million by the third year following the transaction's close. And that rounds out today's Capital Markets Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click onto your Capital Markets channel online and read the full stories as well as the latest developments.